Good morning, hello and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, it is the second day of the financial year and Trump's tariffs is the headline. That seems to go nowhere. Tonight we'll get more details and watch the severity of those tariffs, whether or not India remains insulated, or how severe those tariffs are going to be across the products. Last night we saw that the White House once again condemned India of imposing higher tariffs against US imports. So we will watch out for more details tonight too. But it looks like another weak start for Nifty as trends in the GIFT Nifty say so. A quiet start for our own markets. Global handover is also quite negative. We saw overnight US markets have ended quite mixed. Only Dow Jones ended in the green. Otherwise, we can see S&P 500 as well as Nasdaq slipping in the negative territory too. Today morning, Asian markets were also quite negative, largely lower we saw for an Asian start too. So once again, a very dull start for the market. But in a market like this, how you should be placed, we'll be getting our market experts as usual. So don't forget to drop in your stock related queries on our live feed and we'll take them up shortly too. But before we move things further, let's quickly take a look at the top headlines this hour. US President Donald Trump is set to announce new set of tariffs tonight, which he is calling the Liberation Day. The tariffs are expected to take effect immediately and are aimed at tackling as what he sees as unfair trade practices. Stocks on Wall Street finished largely higher after a volatile session as investors digested weaker than expected economic data. The US 10-year Treasury yields ended at lowest this year ahead of Trump's reciprocal tariffs rollout. Stocks in the Asia Pacific also has opened largely lower as investors await Trump's Liberation Day tariffs. The GIFT Nifty is implying a flat start for our own markets. Oil prices are steady ahead of US tariffs that could raise concerns of deepened global trade war and limit crude demand. Meanwhile, gold prices have eased but remain near record highs as investors bet on the safe haven asset ahead of the tariff uncertainty. And GST collections rise more than 9% in FY25. The mop-up in March crosses 1.96 lakh crore rupees, which is the second highest monthly collection in the financial year. All right, if we look at yesterday's trading session, markets did begin the financial year on a very weak note. Anxiety definitely is growing on the Wall Street ahead of Trump's tariff plans, and imminent reciprocal tariffs are to be laid out today too. Yesterday we saw that the Nifty breached below that 2200 DMA levels, and both the benchmark indices did register the biggest single day drop too. Last we saw in February 28, and so this time yesterday we saw too. Benchmark indices also underperformed the broader end of the markets, and majority of the sectors have bled too. Realty, IT, financial, these were the top losers yesterday, and right now all the market trajectory hinges on what Trump is going to say about the tariff announcements too. We had an interesting report which came out in the morning today by Nomura, where they expect the US reciprocal tariffs to be broader in scope rather than just matching the current tariffs, and they expect that India, Thailand, Brazil are among the 5 most exposed countries to the tariff plans that the President Donald Trump is set to announce. But two cues that will set the tone of the trade today. We have the Nifty put call ratio, which has fallen to 0.76 levels from 0.92 levels. So there is a cautiousness among the investors as we approach the markets today in today's trading session too. Second, if on your screen is your fund flows data, FIIs continue to be net sellers. They've sold stocks which is worth about 5,900 crore rupees in the cash markets. Now this is the largest selling that they did last on February 28 too. DIIs, however, they remain the helping hand in the cash markets. They have bought stocks which is worth about 4,300 crore rupees. Now, just a couple of minutes before we go on the open, but let's take a look at how the pre-open rates stack up at this point of time. Well, Sensex is, however, up about 113 points. Nifty is also very flat in the red, flat in the green at this point of time, 23,192. So a little bit of a mildly positive start. That's what we are hoping for it at pre-open rates, but we'll watch out if we actually do open in the green too. But on that note, let's quickly get on board with our technical expert of the show. Joining me is Ruchit Jain of Motilal Oswal Financial Services. Ruchit, very good morning. We've started FY26 on a weak note, and now that we have tariff shadowing the markets, what are the levels you're watching out from Nifty this week?
Yeah, hi, very good morning. I think a lot of uncertainty related to this tariff is leading to some nervousness in the market since last 2 or 3 trading sessions. And if I look just as a positional data since last 15 20 days, then that rally which happened from 22,000 to 23,800 was mainly because of a short covering by FIs, where their index futures long short ratio had improved from about 15% to 40%. But if you look at last two trading sessions of the data, then again they have turned sellers, where this long short ratio, which started this April series around 40%, has declined again to 30%. So no, they have formed fresh short position in the index futures, and also in the cash segment they have been sellers since last couple of sessions. So I think this is a bit worrisome factor for the markets, and in the absence of any no fresh buying by them, I think our markets would see some sort of no uncertainty in the near term. Sorry, as far as supports are concerned, 23,100 remains the immediate support level, where the 50 DEMA and the 20 DEMA for Nifty are placed. So we would watch out for the 23,100, 23,000 support. Till this is intact, I think it would be the market movement would be more based on the news flows from the from the global front in the near term. So 23,000, 23,100 remains the support for the market. And I think no, until we see any kind of positive data coming in, we are a bit cautious and no expecting some sort of consolidation to play out.
Okay, consolidation is on the cards too. But Ruchit, what about the Bank Nifty index? Yesterday it was below that 5,900 levels also. Some of the heavyweight stocks did play a spoil sport in Bank Nifty weakness. But we saw yesterday that RBI launched an OMO of 80,000 crore rupees into the banking system. So what are the levels? Are you expecting some, a positive momentum in today's trading session?
So I think yesterday's move was just seemed to be a profit booking, because of the event ahead. But overall, if you see the banking and the financial space in last 3 or 4 weeks, where this has been one of the sector which had taken the leadership in the markets turned around, and also relative outperformance was seen. So I think the downside seems to be very limited from here on for the banking and the NBFC space, especially the private sector banks. On the lower side, as far as index levels are concerned, 50,000 is a good support for the index. So I think no one can keep a buy and dip strategy from a positional perspective for the banking index. And in case if we get any dip towards the support of 50,000 in the bank nifty, that could be a buying opportunity again there.
Okay. Anything that you like from the Bank Nifty pack, Ruchit?
I think on declines, one can look at Kotak Bank, which is looking quite positive. It has recently given a breakout from its 4 years of consolidation phase. The volumes have started improving along with the price up move. So I think any corrections also in the near term, if happens in the banking space, then Kotak Bank should see more of a time-wise correction only rather than any significant price-wise dip. So a buy and dip strategy can be kept for Kotak Bank. The 20-day support is around 2050, 2060. So in case of any dips near that support range, one should take that as a buying opportunity.
Okay, Kotak Bank also doing well. 1 month chart speaks so. Ruchit, IT and pharma, that has been experiencing quite the heat because of the tariff uncertainty. But from a technical perspective, which one is better poised in the near term?
So I would say it's better to wait for some clarity to come out on both these sectors, because both IT as well as pharma has been underperformer, and in the recent pullback move also, especially the IT space did not see any kind of participation coming in. So rather than doing any kind of bottom fishing in such uncertainties, better to see some price wise strength coming in both the IT and the pharma names before taking any kind of reversal trade. So IT, we have also advised our clients to keep a wait and watch approach till the event is over. And among the pharma names, I think selective names such as Glenmark Pharma positionally is looking good, where price-wise downside seems to be limited. But for the sector as a whole, we are not very positive, at least in the near term. And we are keeping a wait and watch approach on the pharma names as well.
Wait and watch for pharma names. What about the Nifty Realty Index, Ruchit? Because it was the top loser yesterday. We saw some moves from ready reckoner rates from Maharashtra too. Do you expect more downside in the coming days?
Possible, because if you see the second half of the March, when most of the sectors had seen a decent rally from their lows, realty was one of the sector where the pullback move was relatively not big. So I think when the entire market was going up, we had not seen any kind of outperformance or buying interest coming in the realty names. And again, now when the markets are showing some correction, we are seeing a sell-off in the realty sectors. So I think this sector will continue to be a relative underperformer in the short term, irrespective of how the market moves. For the index, as far as index is concerned, we have seen another lower top getting formed around 890 levels. So until we see this lower top getting surpassed, I think it's better to avoid any kind of bottom fishing in the realty names.
Okay, all right. Ruchit, we did speak about IT, pharma, realty also, but any sector that you are bullish on amidst this tariff uncertainty that's playing out?
So I think yes, no, banking and NBFCs, these are no certain space where we can expect a good outperformance where the downside seems to be limited. So again, the theory remains that says same that in during the last phase of the correction, the sectors which had shown a good outperformance or where the leadership was seen when the market showed turnaround time or a significant pullback. So I think those would be the space where in case of any improvement in the market where where fresh buying interest would be seen. Another name would be from the NBFC space, names such as gold financing, names such as Manappuram, which is there, where a breakout has been seen, from on the monthly charts as well. I think private banks, NBFCs remains the space where downside seems to be limited, and one can look for buying interest over there.
Okay, all right. Just less than 9 seconds to go before we hit the open at this point of time. We're expecting a subdued start for the markets given that we had a tepid global handover. So yes, we are expecting certain, red in the markets too. But yes, first rates coming on your screen in just a few seconds. We can see that, however, a little bit of a, green that we are we are seeing at this point of time. Sensex up about 200 points. Nifty also above that 23,240 levels. So yes, we've started in the green somehow. We have defied the global weakness at this point of time. We can see advances are taking an upper hand at this point of the 39 shares advances, 20 declined. Sensex is also, doing well at this point of time. We're seeing a bit of a, rate adjustment at this point of time. We'll see whether or not how this moves too. Bank Nifty index definitely doing well after the RBI's OMO measures, 0.2% uptick that came in for Bank Nifty index. Nifty metal index, however, seeing a little bit of a profit booking, 0.1% cut coming in there. Media index after yesterday's broad-based sell-off, Nifty media index was one of the index that actually outperformed the markets. But today, however, it's seeing a bit of a profit booking, nearly 0.5% cut coming in there for Nifty media index too. Now, let's take a quick look on Nifty Realty Index. Let's see how it is doing, because that was what we were discussing at this point of time. A little bit of a little bit of a relief at this point of time. 0.4% gains coming in for Nifty Realty Index. Nifty IT Index also with about 0.5% gain coming in there too. Nifty Auto Index slim in the green after we saw that the auto sales figures were quite subdued for the for the month of March. If you look at the Nifty Pharma Index also, it's seeing the rate adjustment. Let's take a look at some of the top gainers on the Nifty 50. Tata Consumer Products with about 6% gains after Goldman Sachs retained their bullish view on the counter. Trent also doing well. Yesterday also it was one of the top Nifty gainer. Today also Trent is extending the gains. 1.4% gains coming in for Trent. Tech Mahindra doing well. 1.2% gains. Zomato, ONGC also featuring among the top Nifty 50 gainers list. On the other hand, if you look at the contrary picture on the top losers, we can see HUL with about 1.2% cut, HCL Tech, Dr. Reddy's Lab 0.6% cut, Geo Financial with about 0.4% cut, and NTPC with about 0.4% cut too. But let's take one stock in focus, because that was your Tata Motors. Let's see how it is doing in trading session today. It is quite subdued, 0.4% cut. This also comes after the company has reported quite a flat domestic sales figure of about 90,500 units in the month of March. Passenger vehicle sales, including EVs, that increased to about 3%. However, commercial vehicles sales, that declined to 3%. Ruchit, if you look at Tata Motors as a stock, that has been experiencing declines given we have the tariff uncertainty, JLR sales impact, and now this muted sales performance from the month of March. Where do you see the stock to go?
So within this auto space, if you compare Tata Motors of last 6 or 8 months, what we have seen, Tata Motors had already been an underperformer, where the stock started correcting from the month of August 24, and we have not seen any kind of high top, high bottom structure getting formed in post then. So one should wait for some side of change in the structure rather than looking for catching the falling knife. So as of now, the overall trend still remains negative for Tata Motors. The last lower top for the stock was recently seen around 715, 720. So I think that remains a crucial pivot level, which needs to be surpassed for any kind of change in trend.
Okay, all right. Let's take one stock in focus also from the Tata Group. That is your Tata Consumer Products, because that is soaring in the trade. Ruchit, how does the stock look like? Goldman Sachs has upgraded the counter to buy, and they have shared a target price of about 1,200 rupees.
The broader trend looks positive over here. We have seen some time-wise correction or consolidation happening, but the stock has formed a good support base recently around 950, 970 kind of range, and the stock has seen a good price volume action too. So here the downside seems to be very limited from current levels also. So if anyone is looking from a bit medium-term perspective, then certainly one can look for buying opportunities in Tata Consumer.
Okay, all right. Certain buying opportunities in Tata Consumer. But let's take another stock in focus. That is your Hindalco with about 0.4% cut, despite the company laying out the plans of quadrupling its recycling capacity by FY30. Ruchit, the stock has been fairly range bound. Do you expect a good breakout in the coming days, or do you expect the consolidation to prevail?
Could be some sort of consolidation. Overall, the metal space is not looking much negative. Metals has been also one space where a high top, high bottom structure or a relative outperformance was seen in last 2 or 3 weeks. But I think if one should look, stocks such as Hindalco more from a bit mid to long term perspective, where price declines towards 580, 600 are getting bought into. So price wise downside seems to be limited. One can keep a buy and dip approach, but not from a short term trading perspective, but rather more from a medium term perspective.
Okay, all right. Let's take some, viewer queries that is trickling in at this point of time. The first query coming in from Naveen, he's asking the view on BOI for the near term. Bank of India, I know that Ruchit, you said that you're quite bullish on the banking space, but for Bank of India, how are you placed? Quite good moves from the past 1 month.
Yes, so even in such kind of markets, we have seen the stock has been doing well. So some pullback move can be expected towards 118, 120 kind of range where the previous swing high resistance is there. So if any existing positions are there, I think one should hold on and review the stock if it comes around that 115, 120 range.
All right. We have another query on persistent systems also. If you look at from December charts, Ruchit, persistent systems is down about 20%. Do you expect further underperformance given the tariff uncertainty?
I believe that one should wait for some clarity for the IT space, because if you look at the IT stocks, rather than what is happening on the domestic front, they have been reacting more to what is happening in the with the US news flows or what the momentum has been seen in the Nasdaq index. So I think this is more concerning the IT space as a whole. So we'll wait for some clarity to come out, before taking any fresh investments or fresh trading bets on the IT space. As far as stock levels goes, the overall trend, in the short term trend seems to be in a corrective phase where 5,700 is the immediate hurdle for the stock. So we need to see the stock surpassing that 5,700 levels before taking a call on resuming any kind of positive trend from here. So maybe some consolidation from the range of 5,700 to 5,000, 4,900 could be seen in the short term.
Okay, all right. Next query coming in from Shweta Naidu is on Vijay Diagnostics. She's holding the stock. She bought the stock at about 1119 rupees, and she's asking whether she should book losses or she should hold at this point of time. If you look at Vijay Diagnostics, Ruchit, the stock is trading at about 954 levels, so she's seeing a bit of a loss at this point of time. What should she do?
The signs of some consolidation in the stock where, if you look at last 3 months, the stock is consolidated within a broad range of 850 to 1200. Now it is sitting around its crucial 200 DMA support. But I think if you can give some time to the stock, the price wise downside seems to be limited for this stock. But yes, the stock may go through some more time wise correction where some sideways movement could be seen. So if you can have keep some patience and look for some 4 to 6 months time frame, then I would advised to continue to hold on your existing positions.
Okay, all right. Hold on to existing positions. But let's move on to another viewer query. That is, Shweta Naidu is asking whether Trent is a good level to enter at this point of time. Trent seeing good moves today also, yesterday also good moves, 1,000 store addition. Where do you expect the stock to go?
Not sure whether it has resumed its any kind of uptrend from here level. Maybe the price-wise correction may have been done at the recent swing lows, but no, one should not rule out any time-wise correction for here on. I think maybe next 1 or 2 trading sessions, one can wait for some clarity to come out. 5,800 is the 5,750 is the 200 DMA for the stock, which has not been surpassed yet, in spite of the news flow that we saw yesterday. So, in case if the stock gives a closing above that 5,750 mark, then one can look for buying opportunities. Otherwise, one can keep on the watch list only for me.
Okay, all right. Let's move on to another viewer query. Mukund Yadav is asking the views on Varun Beverages. From February lows, Ruchit, the stock has, quite outperformed. It is up about 24%. Where do you expect, what's the next target that you're eyeing for?
Pullback move was there, which we have already seen from 420 to 550, 560. Now the resistance for the stock is around 560, and right now it's trading around those levels only. So if the stock manages to surpass that 560 level, then you can expect a continuation of the move towards 600 kind of range. So as of now, the short-term trend remains positive. The immediate support for the stock is around 460. So on around 500 levels. So on existing position, one can keep a stop loss below 500 and hold the positions.
Okay, hold the position at this time. Another viewer query, Mukund is asking on the views on KPI Green. If you look at from February to March charts, the stock is quite range bound, Ruchit. But anything that you're eyeing out for the near term?
No, I think still seems no, we would see some sort of range bound activity getting continued. Recently, post the stock went X bonus in the month of I think January, we had seen a significant sharp sell off in the stock. And after that, whatever pullback move has been seen, we have not seen the moves getting supported by very high volumes, and even the immediate hurdles are not surpassed yet, which is around 470 kind of range. So I think not to do any kind of bottom pushing, avoid any buying over here. Let the stock show some price-wise strength along with good volumes, then only one should look for opportunities over here.
Okay, all right. Let's take one stock in focus. That is your Coal India, because the stock is not doing well. It is down about 1%. The company did say that they will be increasing coal prices by about 10 rupees per ton for both coking and non-coking oil, which is effective from April 16 onwards. Ruchit, from February lows, the stock is up 12%, but do you expect further outperformance? Because Morgan Stanley also in a report today stated out, that Coal India's volumes have quite struggled given the elevated inventories at power plants. So where do you expect the stock to go?
So I think still doesn't seem that we would see any kind of significant uptrend as of now, because the stock breached its 200 DMA support in the later part of the October. And since then, not even once we have seen the stock surpassing the 200 DMA. In fact, in the recent pullback move, also the stock has just managed to resist around the 200 DMA, which was around 410, 412. So only on a breakout above 412, we would expect some positive momentum to coming in Coal India.
Okay, all right. All right, let's move on to another viewer query. That is, he's asking on, Debuk is asking on views on Sharda Motor Corporation. Sharda Motors, if we look at, 3 months chart, 16% down, 1 month flat in the red at this point of time. What are you, any thoughts on the charts, Ruchit?
The overall trend is not positive yet, although we had seen one session where the stock was locked in upper circuit, I think on 24th or 25th of March. But the follow-up move has been missing yet, because generally whenever we see any kind of uptrend coming in, post that 1 day of buying, the follow-up move is very important. So unless we see any kind of follow-up move happening, I don't think that the trend would be positive for now. The immediate hurdle on a closing basis for the stock is around 1800, 1830 levels. So we need a closing above 1830 for any kind of change in trend.
All right, 1830 for any change in trend. Let's move on to another viewer query. That is he's asking the view on Debuke on Premier Energies for an investment. Premier Energies, how does the stock look like on the charts, Ruchit? Because if we look at from the December levels, the stock is tremendously down by about 30%.
Yes, the near-term trend still looks negative only. There has been a low top, low bottom structure. Any pullback moves which were there along with the markets, we have not seen volume-based buying coming in the stock for now. So now 1000 was the immediate hurdle which has not been surpassed yet in this pullback move. So trend still remains negative for premium energy.
Okay, all right. Let's move on to another stock in focus. That is your Titan. Satya is asking the view on long-term support and resistance levels for accumulating for a time span of about 2 years. Any thoughts, Ruchit, for Titan? Past 1 month, stock is down about 3%.
If you look at the longer term charts, then major support would come around 2830 kind of level where the 200 weekly exponential moving average is placed. So for now, I think no signs of any kind of trend reversal as of now. 2830 would be the immediate support level to watch out for in case of any reversals.
All right, let's move on to another viewer query. That is, your Victoria is asking the views on Lemon Tree. Lemon Tree, if you look at past 1 month, the stock has relatively outperformed the markets. 9% uptick we are seeing. Do you expect the bullish trend to sustain?
Hotels over a period of time can continue to do well. We have seen that whatever corrections along with the markets were there in many of the hotel stocks, we have not seen any kind of volume-based selling happening. And whenever the stock comes around the support levels, fresh buying is seen. So if you look at Lemon Tree is there, or even Indian Hotels is there, Chalet Hotels is there. So these are some stocks I think within the hotel space where price-wise downside seems to be limited. Structure-wise, Indian Hotels I think looks more promising. But yes, Lemon Tree Hotels too, from a short-term perspective, 127 is a good support for the stock till that is intact. Overall momentum could be on the positive side.
Okay, all right. Let's move on to another viewer query. That is, your Maninder Singh is asking, what is your view on Ambuja Cements for the next 2 to 3 months? Ruchit, the cement space is actually gaining quite a limelight given we are expecting a good Q4 and a strong demand coming through. But what is your take on Ambuja Cements?
So recently we have seen some buying action in the cement space, but Ambuja Cement I think is yet to surpass its hurdle of 550, 560. So I would keep a wait and watch approach for Ambuja Cement. But as far as the overall cement space is concerned, if I just do comparative analysis, then Shree Cement looks the best one, where a huge consolidation breakout has been seen of late. The volumes are good. Overall, the volumes are improving in the stock. If it's a high price stock, but structure wise, I think Sri Cement has a better setup than Ambuja Cement.
All right, Shree Cement has a better prospect. Let's move on to one stock in focus, that is your Shriram Finance, because the stock is about 0.4% up. The company did receive approval from the RBI to acquire a complete stake in Shriram Overseas Investments from Shriram Investment Holdings. Ruchit, the stock was one of the top laggards yesterday from the Nifty pack, but today it is seeing a bit of an optimism. Do you expect the outperformance to continue, or how are you placed?
So I think yes, this is one stock where any such dips which we are witnessing along with the market should be used as a buying opportunity. We already spoke about the entire NBFC space where overall view is still remains on the positive side, and Shriram Finance has been one of the stock where the high top high bottom structure was placed. And if you look at the swing lows, then the stock bottomed out somewhere in the month of January, whereas the broader markets have seen bottoms getting formed in the month of March. So I think yes, Shriram Finance overall outlook remains positive. This current correction which you have seen in last 3 or 4 days should be used as an opportunity to buy this stock.
All right. Let's move on to another viewer query. That is, your Padu Makireda is asking on Sai Silks on how the stock looks like. What is your view, Ruchit, on this counter?
I have not tracked much, so won't be able to give any view on this.
Okay, all right, all right. Now let's take another stock in focus, that is your KAC International, because the company did receive new orders which was worth about 1200 crore rupees across various businesses. Ruchit, where do you expect the stock to go next, KAC International?
There is some consolidation signs are there, so maybe the price-wise downside could be limited from here on, but there could be some time-wise correction. Good thing is that the volumes have, we have seen good volumes from the recent swing low when the stock rallied from 650 to about 850 kind of range. So considering that the volumes are good along with the price of move, I think this is one stock where if the broader markets whenever resume their uptrend or see some buying momentum, I think a relative strength can be seen in this stock. So if any existing positions are there, one can hold on, or if one is looking for fresh buying and has some a bit mid-term perspective, then one can look for buying opportunities over here with the room to add more in case if we see any dips towards that 650, 660, which were the swing lows for this stock.
Okay, all right. Just one last question before we let you go, Ruchit. What are your top picks at this hour, given we have a lot of uncertainty going on in the market, but what are you seeing as a favorable buy?
Manappuram Finance is one stock, which we have even advised our clients to buy over here. So ideally, irrespective of market conditions, I think the stock has seen a good strength overall since last few weeks. On the monthly chart, we have seen a cup and handle pattern type of breakout coming in Manappuram Finance. So one can go long over here with stop loss below 222 from a short-term perspective, expecting an up move towards 250 soon.
All right. All right. Manappuram Finance is something that we need to look at. But with that, we have to let you go, Ruchit. Thank you so much for your time and answering our viewer queries so patiently.
Thank you.
All right, let's take a quick check of the markets at this point of time. Well, Sensex continues to be in green, up about 300 points. We have extended the gains, 350 points gains we are seeing on the Sensex. Nifty is also up about 105 points above that 23,250 mark too. If you look at what has helped the Nifty recover today, that is definitely your IT stocks, about 1% gains coming in there from Nifty IT. Bank Nifty also doing well, 0.7% gains coming in. So yesterday, wow, the top laggards that we saw, Bank, IT, and of course the Realty too, all of them are doing well and they are holding well for the markets at this point of point of time. If you look at Nifty Metal Index, 0.2% cut. Nifty Media Index seeing a bit of a profit booking, 1% cut coming in there. Nifty Energy Index with about 1% cut too. If you look at the broader end of the markets, mid caps doing well, 0.2% uptake. Small caps, however, seeing a bit of a selling pressure, 0.5% downtick. So yes, broader markets are mixed at this point of time, but headline indices, that is outperforming at this point of time. But with that, let's quickly get on board with our next guest of the show. We have Sandeep Bagla, CEO, Trust Mutual Fund. Sandeep, good morning. Let me start off. Reciprocal tariffs, that is something that the markets are keenly watching. What do you expect from Trump's policy towards India? Sandeep, I think your mic is muted. Could you turn it up?
Me? Can you
Yes,
hear
yes,
me?
now, yes, now it is audible.
Hello, can you hear me?
Yes, now it is audible. You're audible, Sandeep.
Sorry, I can't hear you now.
Okay, there is a bit of a technical glitch then we are experiencing. We'll just connect back with you in just a moment then. All right, we'll just get
I
back
can
with
hear you now.
Sandeep.
Can you hear
Okay,
me?
okay. Yes, I can hear you.
Okay. Sorry about that.
No, no worries, no worries. Sandeep, reciprocal tariffs, that is the big headline. What are you expecting from Trump's policy?
We will have to take a longer term view because this is not going to be the end of the changes in terms of trade with the US and other countries. And not only the tariffs that are related to India, but I think the whole structure of trade globally could change, and that could have, a second derivative impact also. So I think we will have to wait and see, and market will take time for it to absorb properly in terms of prices. So it's not an easy thing. It will take some time.
Okay. Okay, Sandeep, how much do you believe that the markets have priced in these tariff uncertainties? And do you expect a severe correction to unfold after Trump announces his tariff plans? Because yesterday we saw a major sell off, but today we are seeing back in the green.
See, tariffs are one thing. The other important thing is that the Indian economy itself has slowed down, and there is no denying that. So I think, earlier we were completely priced, in a very optimistic fashion. So the best case scenarios were getting priced in. Now I think the valuations have become more realistic in nature. But if you ask me that can tariffs lead to further uncertainty, if markets tend to become a little pessimistic, then there is possible downside in the near term. So I don't think it's been fully priced in.
Okay, all right. So the very interesting point you mentioned there, since that the economy is weakening and of course valuations have been reset, however. But how do you expect the FII flows to pan out? Should investors brace in, wait and watch, or do you believe we have some way bottomed out the outflows? What are you expecting on that front?
It's very difficult to ascertain about the timing of the FPI flows. But one thing is very sure that, at the current level of valuations, they are probably finding other avenues which are probably more attractive compared to India equity market at this point of time. Second thing is another very important thing is probably the central banks globally, which were, easing the monetary policy and increasing the amount of money floating around in the system by printing more money. What was popularly called as QE has now turned to QT, which is quantitative tightening. So probably we will have to understand that a total amount of money available is coming down. So there is some amount of rationing and there is some amount of adjustment in terms of the amount of money dedicated to emerging markets and India. Once that reset is over, I guess the FPI inflows should start again.
Okay, okay. What are you expecting from the RBI MPC policy front? Because we have it next week and we have the tariff uncertainty which is playing out right now. Do you expect another rate cut, or and what size are you expecting if you do?
See, given the fact that there is some anemic growth in India, so RBI has leaving no stone unturned to support growth, given the fact that inflation, headline inflation has come down. Probably headline inflation could go up after 1 or 2 years, but this is a great opportunity for India to sort of stimulate the economy. And one of the important parts is the interest rates and the amount of liquidity in the system. And I think in that line, RBI is likely to cut interest rates once more. I don't expect big bank measures. So 25 basis points is par for the course. Anything over and above that would be a surprise. So I think 25 basis points rate cut and some measures to stimulate the economy and making sure that the credit flows to the productive sectors in an efficient way would be the lookout for RBI, and that is what I expect.
Okay, okay. All right, Sandeep, we have the Q4 earnings season also, which will begin in just 2 weeks. But do you believe that the expectations of investors have been reset, given that you also mentioned that valuations have turned relatively attractive?
Yeah, I think people are expecting Q4 earnings to be weak because of number of reasons. I think government had also stopped spending to keep the fiscal balance for the current year or the last financial year. So I think markets are expecting that government spending will resume, credit offtake will improve, and while the results are likely to be quite weak, but I think that's already been built into the market prices.
Okay. Any sector that you are finding valuable at this point of time now that we're heading into the earnings season?
So I think the more predictable segments like the banking or the larger companies, I think they are likely to report better numbers. I think anything that is likely to be consumer oriented or where inflation has impact on the bottom line are likely to be weak. I think consumer discretionary will be slightly weak. But there are segments which are doing very well. I think hotels are doing very well. Travel is doing very well. I think pharma is likely to do very well. So I think some of the segments which are not really impacted by consumer slowdown and inflation, they are likely to do well. I think banks would like to do quite well actually.
Okay, okay. All right. Sandeep, everyone is very cautious about the export oriented themes right now. But how do you see IT space in this financial year? They're expecting that, there will be a little bit of a deal slowdown too. And what are you expecting from the ITs?
Yeah, I think there is some amount of predictability in the larger IT companies in terms of their order flows. But these are again, they are not likely to be spectacular. And I think we'll have to wait and watch because, the entire terms of trade are getting redrawn. And it is too early for anybody to predict. And the good thing is that valuations have come down to more reasonable levels. So I think it's a good space to remain invested in with a slightly medium term perspective.
Okay, okay, all right. Sandeep, let me ask you about telecom space, because yesterday we had a very interesting news by Vodafone Idea, and where the government has increased its stake on the company also. But how do you see this entire space to segregate, be it your Bharti Airtel, we have Jio also in the space, and of course Vodafone Idea too.
See, I don't have any specific insights or views on the telecom sector. I think the sector is likely to expand at the normal growth rates. I don't see any spectacular growth in that sector. So we'd probably have the index weight on telecom. So no special views on telecom as a sector.
Okay, okay, all right. All right, Sandeep. Let me ask you about auto space also, because that is where we saw the March sales figures that came in quite tepid. Now that we also have apart from the reciprocal tariffs, we also have auto tariffs which will be implemented from April 3rd onwards. So, where do you expect this to go from the auto pack? Do you expect this Indian automakers to remain insulated and expect the auto component makers to be, more on the tariff heat, or how are you seeing it?
See, the auto industry has been experiencing a slowdown, and channel checks with very reliable large players have revealed that, while the manufacturers have been trying to boost up the confidence, but the actual sales have been quite tepid. I don't see any let up on that for the next 2 quarters. People, in fact, are likely to postpone their large ticket purchases given the volatility in equity markets. So I don't see any let up in the auto sector in the near term.
Okay, okay. Sandeep, any space that you're completely cautious about? Now that we've discussed plenty of them, be it your auto, banks, and even IT for that matter.
I think it's the broad market that one needs to be a little cautious about, given the fact that growth will take time to pick up, and also the fact that there are changing terms of trade and policies which are getting changed. So I think, given the fact that there's some amount of inflationary worry, especially in the US, and going to be rapid currency movements, I think the broad market is where I would like to express some caution on. From a medium term to long term perspective, this is going to provide a great investment opportunity. But I think one should not really expect fireworks in the near term. It is likely to be a slow grind, and that slow grind is not likely to have a very pleasant experience in the short term.
Okay,
So one
okay.
requires to be cautious on the broad markets, I would say.
Okay, okay. Oh, but Sandeep, what do you expect the new financial year to hold in for the corporate India? Because so far, of course, Q4 is also, everybody is talking about its consensus. Everyone is talking about it. It's going to be tepid too, Q4 results. But from FY26, do you expect things to improve?
I think so. I think RBI is doing its part. I think government will also, undertake measures to sort of, I won't say kickstart, but give the economy a little boost. I
Hmm.
think it is the sentiment, I think, which is a little worrisome. And I think as the market recovers, as the economy recovers, sentiment will also catch up. So I think slow and steady, a little cautious approach is I think the second half is likely to be far better. But I think the first half is likely to be a little slow.
Okay, all right. All right, with that, we have to let you go, Sandeep. But thank you so much for your time and hope that we connect with you soon.
Thank you so much.
All right. All right, let's quickly take a check of the markets at this point of time. Sensex is up about 350 points. Nifty is also above that 250 mark too. So yes, broadly we are in the green at this point of time. Positive momentum is sustaining throughout the markets. Nifty Auto Index doing well, Nifty IT also doing well. But of course, from the day's high, the all of the sectoral indices and of course the markets have trimmed majority of the gains, but still doing well at this point of time. Nifty Pharma with about 0.1% gain, very slim gains coming in there. Nifty Metal Index with 0.5% cut at this point of time. Nifty Small Cap Index, however, continues to not do well. Small cap seeing a cut of about 0.7% and mid caps also experiencing a cut of about 0.1%. So yes, we did start on a greatly good note, but right now we are off that recovery at this point of time, off the day's high at this point of time. But with that, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3:30 for Closing Bell. We will be discussing about how the market is developed and what the stocks were in focus. Until then, signing off.